Hello, hello, and welcome to Losers Become Winners for September 16th. The alphas fall back with CVS at 79%. There it is, 79% for CVS. It's still in this, getting into a little of a plateau zone. You can tell the high was here, then it matched that high, oh, breakout, but then the end close was high, and now the close here is, so it's still in the, going in the right direction. Uh, that said, it's going into that. That's all. And much as you said, you can't make up a story if there's no story there. All right, that is that said, and let's move on to the second position for the alphas. That is Walgreen, and Walgreen here is doing it's a put. It's going in the wrong direction, but we are ready. Now, what's really cool is that the 30-day moving average is below the entry point. So if we can get a close between these 2 points, we should be able to get maybe a small profit or a break even right in that area. So time will tell, because we've seen price come up, staggered, and then retreat. And the 30-day moving average just keeps on chasing right behind it, going on now, and it's at 44%. We're at 39 with KR. So KR is coming up here. There's KR, and KR is doing good. It's going in the right direction. Remember, this is 29% yesterday. Today we have 39%. It's doing quite nicely, going in the right direction, and getting close to get crossed that below that 30-day moving average line. Going on to CVX. Remember, we are in the alphas. The alphas is a 30-day moving average strategy, and that's what we're doing here. Let's focus here on the alphas. So this it's starting to break out of this plateau, but the 30-day moving average is below the entry price, and that is makes it kind of cool that if we can get now, the warning track plays a secondary role, and that is if it to close right in here so that we can stay on the positive side of the trade. Okay, it's at 38%. I forgot what it was yesterday. It was quite high. I think it was 50 something yesterday, 50, 51. Okay, going on to energy, coming down to energy and XLE, and nice. So it's just barely crossed below the EP, the entry price. So we're going to be sitting on it for a while until we get down here, or we don't get a chance to do a track below the entry point, and we end up having a stop here, which will produce a small loss. Okay, T, Gold, and Yelp are running behind for the alphas. That takes us over to the Tigers. So over here at the Tigers, we got we did have an exit, but let's start off with our leader for the Tigers, right here, and you can see that this is green price channel. Green price channel. It has not moved. It hasn't popped yet, so we're looking for anticipation that the price can stabilize here. Then this will slowly creep up to meet it, and that would be looking toward our out. Also remember too that we are in our Elvis shift, and our Elvis shift is that we went from the 30 ROI, take profit at 30 ROI. We're waiting for the 100 ROI to take profit, and it's going to be 100 ROI or get stopped out in the opposite side of the green price channel for the exit. That takes us UAA. Now the surprise here with UAA is really cool, and that is because of the fact is that this last week was really dismal. I mean, we were like really bad. Right in this area in here, somewhere in this area in here, we were running in the minus 30s. And now we're up to 17%. Kind of cool. 17%. It helps. It hasn't broken out. The price channel has not broken up, but when the green price channel breaks out and starts creeping up, we'll then get into a much better position. Coming over now to our next leader is Edison, and there it is. And this is all pretty much what's happening with energy all the way across. It's some spots are getting good, some spots are getting bad, but it happens. We are here still on the green price channel for our stop. We're waiting for the 100 ROI, or this starts creeping up on its own to eventually cross the entry point and lock in the profit. That takes us to CVX. Remember, I mentioned CVX is in the alphas, but as you can see here for the tigers, yeah, we squeeze it a little bit more so you can get more of this text on screen, and we are looking at a put. We're looking for the December crash. Now, we don't know what the market is going to happen, but October traditionally has been September, which is just 2 more weeks, and October have traditionally been crash months. But this being an unusual situation where we have this pandemic which has wreaked damage across all levels and sectors of the economy, this becomes a very strange atmosphere, because big money is still here. The pension funds, the insurance companies are all still in the game. So as long as they're still in the game, the market has some strength to continue. How long will it last? We'll see, because there is talk. You got to pay attention. I would recommend a guy named Mark Moss, MOSS. He does some very good analogies, and he did one on real estate that come November, we just might be in a problem come November with real estate. So that is today's lesson is Mark Moss. Check him out. Okay, CVX. Let's go on now to Pepsi. And Pepsi got a little bit of a peak of help, just a tiny bit, not a lot, but enough to stay in the game. Nice direction. And that is, except everybody else is running behind, and that pretty much is the wrap up today's report for the, oh, I forgot to bring up IYR real estate. We just talked about that. Now this was a put, and real estate is bouncing up very nicely, which was a very surprise. We did get stopped out with a doji spike right there. 242 with with one contract, 242, $2 in relevant fees, 244, 1013 owed prior, a new owe now of 1257. And that does conclude today's report for the losers become winners for September 16th, with CVS falling back to 79%. And I thank you for stopping by and checking it out. Bye bye.